Hey friends, checking in on the stock market today. Check out this new fancy look. We've got our social media things and I'm stuck in a box. So I put out an Atlas video over the weekend. It's in the comments of this video if you haven't checked it out. And I will do more of those kinds of videos, reflecting, talking away from the charts as certain topics come up. As far as the broader market is concerned, the bears are in complete control still. We have been in a big time drop ever since the CPI reaction peaked out. And that is now 10%. We dropped 10%, averaging pretty much since we topped there, 2% drop a day. S&P 500 is only 8%, NASDAQ more like 10%, but full bear control. At no point today was there anything other than full bear control. It didn't hit all of our major sectors at the low of the day at the same time until the afternoon, but it was very clear full bear control. The hourly downtrends remain our guide. And if we look at SPY, we had SPY end of Friday bounce, 384.96, didn't break that level this morning, and then just dropped down and broke support. So hourly downtrend remains intact. We know that we're getting due for a daily bounce here, and we also know that daily lower highs are the most likely result of that bounce. My mindset in this market has been, when the bears prove full control, don't look for bounces. Look for the lower highs on longer term time frames, 15-minute, hourly, or daily. You know, at this point, I know that we're going to be getting due for a bounce, so I'm patiently waiting for daily lower highs as a bear from here. And there are going to be bounces, but again, it's just determining what is the probability that I'm going to get that bounce. Is it more favorable for me to scout the bounce or more favorable to scout the lower high? And just like when we're in a bull market, it's more favorable to scout the dips for buying than trying to short, and it's the opposite in this market environment. So the next major check mark that the bears want to see. The bears saw a lot of check marks today. We'll look at some of them in just a moment. But the next one, the bears are going to have to confirm daily downtrends with lower highs and lower lows as the result of the next bounce. I've been talking about how I'm watching the 2-week time frame on the S&P 500, and we've retraced at this point about 50%. So if we confirm a daily downtrend, the next time we get a daily bounce going, that retracement is going to be starting to pull back towards 60% plus, which will begin to favor the bears. There are some sectors that are positioned well to drop to lower lows, and there are other names that are positioned well to hold higher lows. And we'll look at those in just a moment. So the NASDAQ is in the same boat. Big old pullback on the daily. Lots of space for the daily lower high to be the result of the next bounce. Just a clear hourly downtrend. We're not extreme. We're not oversold and extreme on any time frame. NASDAQ, daily RSI, not close to oversold. 4-hour is just getting oversold, but we've certainly seen it dip significantly lower this year. Hourly RSI has been fluctuating in and out of oversold, but again, not at extremes. So just stick with the hourly downtrend. QQQ, hourly, lower highs and lower lows all day. We had a midday bounce that just set another hourly lower high. It looked a bit like a rising wedge, not quite. It was more like a channel here. And so again, what I did is didn't trade in the first hour of the morning, but then patiently waited for a setup that I liked. And so the first trade that I took on the day was Netflix, and Netflix was showing relative strength. But what is the number one reason that relative strength shifts into relative weakness? It's a rejection from a key resistance level on the individual name. And so for Netflix, we had a double top, or look at all this resistance from Friday. We had tops in the 293s to 294s, a whole bunch of them. And so we were heading up to that resistance zone, and I was looking for anything under those levels to be an hourly lower high. And so I was looking at a top fishing setup. I saw this pullback. I said, okay, that's a big enough 5-minute pullback where I'm going to scout a 5-minute lower high to be the result of that bounce. And as soon as we topped out here, grabbed a short, we rolled over, I exit half. I'm now risk-free with a stop over the high of the day. And then I exited the second half when the bulls proved a resistance break. This was a 15-minute trend change here, and that stopped me out the second half of the position. Other than that, took a Tesla short. We'll look at that in just a moment. But again, it's just, okay, watch the morning. Can bulls prove anything to me? No. So I know I'm scouting bearish, and then I'm just patiently waiting for a low-risk, solid-reward bearish setup that I like. Dollar, Still weak. In the face of all this broader stock market weakness, the dollar is not proving anything yet. If the dollar gets over daily EMA 12 resistance for the first time and shapes up a daily uptrend for the first time in 6 weeks, that can only add downward pressure on stocks, in my opinion. So keeping an eye on that, and it's still the falling wedge that's trying to break bull. And we're watching to see, does the dollar breaking bull, does that lead to our metals becoming laggard bears? And again, I've said this many times, but the biggest takeaway for me in 2022 is watching lead bulls become laggard bears. After watching after watching weaker names become laggards to the bull market, it's the exact opposite. And so essentially, once the bears start to prove something to us in the broader market, I'm just looking around at who's going to roll over next. Which sector is going to show us weakness next? Semiconductor falling through base of support on SMH. We're now in an area without a whole lot of support. We're looking at 203.44 as a level. NVDA is still holding on stronger, but NVDA is shaping up a potential head and shoulders where if we hold 156.67, the bulls keep control, but this is a potential head and shoulders next time we bounce on the daily. So what we have to see is bears control with lower highs and lower lows. Because again, what you will often see in markets is one direction will see a fast, hard move. And if it doesn't follow through with the trend change, it doesn't follow through. And so again, the analogy that I give is the bears have punched the bulls in the mouth on this FOMC and CPI reaction. And now once the scale, it's been all bear, and once the scales tilt into a daily bounce, does that mark the low for multiple days or just a quick little 2-day bounce into lower lows? That will be very telling for me. And so there are a ton of names where we will be scouting daily lower highs to be the result of that bounce. Tesla is remaining weak. I was watching for the possibility of Tesla to be a bull today because of the Elon Musk Twitter poll overnight and potentially stepping down from running Twitter, which is what the narrative has been. Tesla was weak because Elon Musk sold shares, absolutely. But Tesla was relatively weaker than the broader market before he sold a share, referring to the last month of trading. And so it's been the narrative of bulls not being pleased. And you can see it on Twitter, all these big investors and longtime supporters saying, hey, Elon, we want a CEO that's going to be focusing on Tesla. We think you're distracting, blah, blah, blah. And so now the narrative is shifting a little bit where, okay, well, maybe Elon Musk going back to Tesla full time is beneficial for the company. But the relative strength from pre-market and after the bell rang shifted very quickly. So here was the relative strength pre-market, holding on much better as, the rest of the market was trading right here pre-market pretty much compared to the low of Friday. But it all changed, and here was relative strength again, the bounce to the new high of the day. The failure to confirm the 5-minute uptrend here had everything shift, and we went right back to being a lead bear from that 5-minute downtrend confirming onward. We then had a mini short squeeze. 5-minute stair-step pattern up. We rolled over into a 5-minute stair-step pattern down. Great volatility. It ended up in a 15-minute equilibrium, and I was scouting the 15-minute lower high here. I was using 1-minute RSI approaching 70. I made a bearish entry at 151.25. I put my stop at 151.51. So a very tight stop. And essentially my mindset was, that's either the 15-minute lower high or I'm wrong and I want to stop out. And so we ended up pulling back nicely. I sell half, I get risk-free, and I sold the second half before I went live at the end of the day. And again, I was posting those in the chat room as I was taking them, not just doing hindsight review. But other than that, it was just a couple shorts for me today and just patiently waiting to watch if there is a shift underway. But Tesla is shaping up an hourly trend change. When's the last time we've seen an hourly trend change? It's been at least a week since we've had an hourly uptrend. So the bulls must hold 145.82 and break 153.88 to confirm the hourly uptrend tomorrow to try and get a daily bounce going. Again, just like most places in the market, bears are just waiting for that daily lower high. Right now, from where we stand, Tesla could see a bounce of 9% before we get to daily EMA 12 resistance. Our last daily lower high is currently 22% away. We're not changing this daily trend anytime soon. It would require days of bounce, days of pullback, days of trend change follow through. So bears are still very comfortable Again, we're expecting the whole market is likely going to bounce sooner than later on the daily time frame. So bears won't be surprised when Tesla sees a bounce to test daily EMA 12, but it's going to require a lot of work to shift this momentum. Another major name, Amazon, is in free fall again. New fear low. We cannot have any confidence in the broader market finding a bottom if our lead generals, the most important individual names due to their weight in QQQ and SPY and all these ETFs, if they're in free fall. Amazon is hitting the lowest level in a couple years, year and a half at least, and there is no support in sight. And the downtrend just continues. Apple is close to free fall. Apple's breaking its sideways equilibrium bear, but now it's the fear low of 128.65. And if 128.65 breaks from here, if I'm a bear, what I want to see is an Apple daily low or high and then break that fear low to really get the fear cooking again. Because if you got Apple and Amazon in free fall at their lows, the probabilities that the NASDAQ is going to join it's very high. And so again, if we just look through our major sectors right now, well, I'll do that in a moment. XLF or XLV, lead bull changing to a bear. So the signal was losing daily EMA 12, losing the uptrend for the first time in 6 weeks. Again, the bears still have to confirm it, but every red day, we have more and more space for the daily lower high to be the result of the next bounce. Weekly chart is still very strong overall, so we're not going to lose sight of that. The financial sector is still weak. It was the lead bull today, but didn't really do much on its own. Downtrend on the daily, lots of space for a lower high next bounce. IWM, still all bears. We know this is one of our weaker sectors. Lots of space for a daily lower high. So let's now look at our major sectors on the longer term time frame. Who's more likely to hit a lower low? And we're going to use the 2-week chart. So SPY, 50% retracement, middle of the road. QQQ, retracement, more significant at this point. Probability that we're going to see a lower low is higher than most other names that we look at. Retracement of already over 65%. IWM, on the weaker side, also would be probably one of the closer names to hitting lower lows. 65% plus retracement so far. QQQ and IWM are on the weaker side. XLV, it's on the stronger side. At this point, the retracement is not anywhere close to that. We're not even testing 382 retracement at this point. If we were as weak, we would be down here at 128. So we would be down an extra 4% from where we stand. Even the financial sector is not that weak. XLF on the 2-week time frame, retracement size more in line with SPY, more like 50%. So just from that information, from retracement sizes, we can say it is more likely that QQQ and IWM will hit lower lows. It is less likely that XLF and XLV will hit lower lows from here. So we're going to keep a close eye on how that continues to shape up. The biotech sector, 2-day supports, we are on the verge of breaking, testing those levels right now. We'll see if there's a potential bottom fish off those levels tomorrow as the bulls try and maintain within this equilibrium, but we are on the verge of breaking a range that has been tightening for the last 5 weeks of trading. So bulls' backs are against the wall, and they need the entire market to start this daily bounce tomorrow to try and help defend that support. Cannabis names getting crushed. So we are now officially no hope of safe passing in 2022. And we can see that it's been a free fall of almost 50% in 2+ weeks of trading for the Canadian names. We are approaching our fear lows, roughly 10% from that fear low. TLRY, same deal, approaching 265, that low. US cannabis MSOS is getting absolutely destroyed. All-time lows, free fall, bear flag on the daily confirmed, and you can see the volume pour in at the end of the day once that news became official. So again, I just made a tweet about this, but I've been following this cannabis sector for 12 years. The majority of the time of that 12 years, I'd say I was in positions 10% of the time over the last 12 years. There's going to be opportunity in this sector again. There will be triple-digit percentage gains to be had in this sector with the right catalysts from the federal government. And until then, we don't need to have positions. We preserve our capital and we patiently stalk the setup. And it might be 6 months, it might be 18 months from now as to when the opportunity presents itself again. And so it's just another thing that I keep an eye on. Same thing with crypto. I haven't traded crypto in a while. I go through cycles where I trade crypto aggressively in bull markets and then way less in bear markets. And so it's just biding time and preserving capital while we wait for the opportunity. Newer traders, newer investors, a lot of you learning this lesson, and again, I learned it in my early trading career as well. Instead of biding time and observing in cash, it's scaling in and bag holding, which is obviously what we want to learn to never do again if we want to be in control. Otherwise, we are not in control. We are just a leaf blowing in the wind of the flashing digital numbers on the screen. When I am the one clicking the buttons and determining when I'm in and out and how much I can risk, I'm in control. So I know it's tough. The sector has been brutal, but there will be opportunity again. I mean, we saw it. We just ran almost 100% on the little tiniest potential of a federal catalyst. So we know there will be notable, significant federal catalysts sometime in the next decade. We know to not hold our breath with how slow the government is. We wait. We stalk our prey, and then we pounce when the opportunity presents itself. The metals, the miners are leading the metals on the way down. The miners led the metals on the way up. So right now where gold is trading, gold is not hitting. I'd say gold is having its, it's maybe 6th or 7th highest close. I don't know what I'm trying to say. I'm trying to say that the miners are way weaker. GDX is hitting the level from November 29th. GDXJ, same thing, hitting November 29th. If gold were that weak, we would be trading down at 1740s. So we can see the metals are holding on better than the miners. But these are red flags for the bulls. The red flag is miners are telling us that further pullback may be coming here. So my question into next week, are the metals about to be laggard relative bulls that shift to weakness? If gold breaks 1773, we confirm the daily downtrend. And silver is a similar setup where if we break 2255, we confirm the daily downtrend. And again, if the dollar gets over daily EMA 12 resistance, that increases the probabilities that the metals are going to see more significant weekly consolidation. So again, what you have happened in the market is when you get as significant a bear exclamation point as what we've seen over the last few days, you look at the NASDAQ and the S&P 500, and a lot of traders might be saying, oh man, I missed it. And they're looking around, okay, well, who hasn't shown weakness yet? Who's going to maybe show the weakness next if things get really ugly? And so that's why the mindset of laggards happens. So we will be scouting weekly higher lows in these miners, but question is, how can they hold up if the dollar gets a bounce going? How will they hold up if the dollar gets a notable bounce going? Oil daily higher low trying to form, and actually it is officially set at 73.40. We broke the high of Friday. So lower high, higher low. Bulls must break 77.83 to confirm the daily uptrend for the first time in a month. So keeping an eye on that, and the energy sector would benefit if that were to happen. The energy sector is looking for a weekly higher low as well. And we can see the energy sector has not been nearly as weak as the rest of the market over the last week. We're not hitting lower lows yet. So oil bulls trying to help energy sector bulls hold some short-term support. Natural gas bears following through. We knew the daily lower high was the most likely scenario. We ended up with a 4-hour double top before rolling over. And now we scout a daily higher low, anything above 5086. 4-hour trend change back to the bulls is needed for a daily higher low to be shaping up. So in summary, bears have complete control in the market. We're seeing stronger names rolling over into weakness. We know we're scouting a short-term bounce because bears are exhausting themselves in the last 4 or 5 trading days. Bears are going to be scouting daily lower highs for swing entries. Bears, the only thing that is missing from the Bears check mark is Apple fresh fear lows and daily downtrends confirmed. So if we confirm daily downtrends after the next daily bounce takes place, we're then looking at fear lows in the NASDAQ and in IWM and potentially in SPY. And that's that. Until then, it's just watching the hourly downtrends and looking for signs that a daily bounce is shaping up. Bears definitely don't want to get greedy at these levels, knowing how much they have seen, how many gains they've seen in the last handful of days here. One day at a time. Hourly downtrend is our guide. And we're down to our last full trading week this week. No trading next Monday, no trading the Monday after that. 8 trading days left in the year, I believe. Let's make the best of it. Do good things. I'm going to end videos now over the next few weeks with an old road trip. And I know no matter how many times I say this, people are going to say, have fun on your trip and, give me a shout when you're in Texas. This is a road trip from a decade ago. And this is me 2 years ago, going over the road trip. So we're going back in time to a video that's looking back in time on a road trip. So I'm not on a road trip, but it's a fun story and an adventure. And I like reliving it because it was one of the best times of my life. And I enjoy sharing it with you. Have a good day. We'll wrap it up here with story time. I'm going to kick it off with a road trip that I went on. And just to set the stage before we get into it, let's see. At this point in time, I started off with my road tripping career when I was in college, and I watched the movie, what's it called? Into the Wild. So I watched Into the Wild, and as soon as I saw it, I said, all right, we're going to Yellowstone. I'm trying to adventure. And so with my college buddies, we drove to Yellowstone 36 hours straight to the Badlands in South Dakota, and then to the Yellowstone, and we went out into the bush for 10 days backcountry camping. We had no idea what we were doing in terms of supplies to bring, and we were starved without food out in the backcountry. It was a huge learning experience, and we had such insufficient gear. It was comical looking back upon it, but we were pretty miserable and hungry, sustaining ourselves with ramen noodles after hiking 10 miles a day for 100 miles. So that was fun. After that, I went on a road trip with my buddies after graduating college. I took 2 of them, and we were going around the country to all the national parks. Found out about 2 weeks before the trip that neither of them had ever been camping. So I was pretty much the leader of that excursion and did all the planning and all the driving, and we took my Honda Civic out there. And after that, I had a great experience with them. It was a ton of fun, but there were a lot of times where I was sitting there saying, man, I wish I were by myself, because I would wake up early. I'd be up with the sun, and they'd sleep 2 or 3 hours after that, so I'd have to just be bumming around the campsite waiting for them, when in reality I wanted to be up and going and on with my day. So definitely appreciated the camaraderie and company and fun that we had, but I wanted to do my own, so I set out on my own many-month road trip around the country in my Honda Civic, living out of my car, and I was also doing it on a budget. So I'm a minimalist at heart my whole life. I always have been conservative with money, conservative with resources, and so I had a game plan of, I'm just going to try and live out of my car and do this adventure with as much money as I'd be spending on rent. And I had saved up at that point in my trading career. I had success in the U.S. marijuana penny stock market, and I had saved up enough, maybe $20,000, that I was comfortable to know that I could, travel around for a year and figure some things out and have some fun before I looked at the job world and looked at making money. And at that point, I didn't think I was going to be a full-time trader my whole life. I hadn't gotten to that point. I had some successful swing trading, and I traded a little bit while I was on my road trip by myself. Not a whole lot, but just some swing trades. There would be times where I wouldn't have internet for a whole week, so I would do some swing trading. And there were times where I would be, put in one place for a couple weeks visiting a friend or something, and that would allow me to do some trading as well. But overall, I was slowing way down on trading and just looking to do some adventuring. So started it off in, let's go with, that's what my life was. That was everything that I owned that I would put in my car, and had all the essentials. I had a big tent that I grew up with. This was like a 6-person party tent. I had a 4-person tent that I would bust out when I was camping out of my car. And then I had a 1-person tent that was really light for when I was backcountry camping. I had all my rain gear, and this was my sleeping mat, which part of being a minimalist, I made tons of mistakes in terms of, skimping on my gear. This army pad is what, like $8. It's this thick. You might as well be sleeping on the ground. It did nothing. And I said, all right, now I need to buy a $100 sleeping mat after this experience because I was just miserable and it wasn't worth it. There are some things that money is worth being spent on, and a sleeping mat is definitely one of them. So that was another lesson that I learned. So that was what I left with in my car. Didn't have much else room, and because the Honda Civic's very small, it was completely filled up. I started on the East Coast in North Carolina in the Smoky Mountains, pretty close to where I'm living right now, and that's why they call them the Smoky Mountains, because the elevation has the clouds rolling right through them, and it's an awesome national park. And I got to learn a lot about these national parks in terms of their, rules and regulations. Some of them, like Shenandoah Valley in Virginia, is extremely friendly to campers. You get a permit and it pretty much says, don't camp within 100 feet of a road, 100 feet of a trail. And other than that, you can go wherever you want and sleep wherever you want. And I like that because there's so many times where I'm hiking, I'm just walking by a spot and I'm like, oh, that's the spot. I want to camp there. And oftentimes, it's not where your permit designates that you're supposed to go or things like that. So in Smoky Mountain, it's not the best camping. They have one designated campsite for developed camping, and it gets really crowded with a ton of people. And other than that, there's a lot of surrounding areas of national forests, and national forests are a lot more liberal with their rules, and you can pretty much pull off and backcountry camp wherever. There's very little regulation in that regard. So I generally would do that and then, go and hike inside the park, but not really camping in the park. But in this instance, I was. So night one of the road trip, setting off on this excursion, and I was heading out to my campsite a little bit late in the afternoon and close to the evening, actually. I was in a bit of a hurry. So got into the trail, started hiking. I think I had maybe 1.5 miles, 2 miles to get to my campsite. Got about a third of the way there, and it just started downpouring. And, I had some rain gear, but this is the kind of downpour that no matter what, everything's going to be soaked, and you're going to have to set up your tent, and your tent's going to be soaked, and your sleeping bag's going to be soaked. And so I just turned around and walked back to my car, took off all my clothes, got naked in my car, and just sat there for a while and started to have the doubts, what am I doing? Is this, what, I'm about to do this for a couple months. Can I even do this? Just, all those negative thoughts that just started building, and certainly on the back of having my night number one completely ruined in terms of what I was planning on, and it being pretty much, one of the worst case scenarios of comfortability for that night. So with all that doubt, honestly, I took a hit of ganja and I put on some music, and I've never experienced a more significant, impactful 180-degree turnaround of emotions. Generally, fortunately, I don't really have those negative feelings. I have a very happy life that I'm very grateful for, but in this instance, it was just like, whoa, I can't wait. This is so exciting. Everything is perfect. I couldn't be happier. And that I will always remember for how notable the complete turnaround in mental state was with just those two little combinations. And I think it was either listening to Pink Floyd and Jimi Hendrix when it happened as well. Very notable. I wrote that down somewhere. I also took notes and dream journal. That's another thing with the part of this trip that I was doing. A big goal I had was learning lucid dreaming, and I was already lucid dreaming at that point, but I just mean getting really good at it and reading about it. So I brought multiple books with me, and I was keeping dream journals, and I was adjusting my sleep schedule to wake up really early in the morning and then go do something and break up my sleep cycle and then go back to sleep for an hour or two. And that's when you have the best lucid dreams. And I actually just had a lucid dream when I was napping an hour ago before making this video. But that was a good start. So I camped in the Smoky Mountain National Park for a couple nights after regaining my composure. And I've gone there in the summer, in the winter, maybe 3 or 4 times total. And I've never gone there without seeing elk. So there's elk all over, and they're just hanging out. They're used to people, very accustomed to it. And some nice fungi. What a lot of people don't know is that in Western North Carolina, it's a temperate rainforest. So it's extremely lush. They get a lot of water that, supplements all these plants. And there's tons of plant life. I want to say there's some kind of statistic like the most diverse plant life in the continental United States. I might be making that up, but it's something along those lines in terms of the variety of plant life. And if you've been to Western North Carolina in the summer, it blows you away with how lush everything is. And it does seem like a jungle. So here are some fungi getting all up on a tree. And one of my favorite parts about road tripping is water. Drinking, fresh sources. And this is a really easy filter that you just scoop up the water and hang it and within 5 minutes, you have a gallon filled up of fresh mountain creek water. And obviously, the closer to the source, the closer into the top of the mountains you get it, the better it's going to be in terms of cleanliness. But that was something that I really started to appreciate, just fresh, clean water directly from the source, and that helped me feel really connected. So this entire road trip, we're going to go through all the states and all the national parks, and I took a bunch of pictures, not much video, but this entire road trip, in my opinion, shaped a lot of my psychology and personal everything about me that makes me a good trader. So I do think there are contributions to that. A lot of comfortability being alone, and it's almost to the point now where, you know, I need space to be alone because I enjoy it so much. But that was definitely due to this road trip and so many months on the road being alone. And there were times where I would go, you know, a couple weeks without having any interaction with people aside from, you know, just in passing hellos. So let's see what else. Syncing up with the sun. So my entire rhythm changed with the sun, where I was waking up with the sun and going to sleep. You know, if you're by yourself and it's nighttime and pitch black and you're out in the middle of the woods, there's not a whole lot to do. So I would generally go to sleep right as the sun was going down. So that would at times be, you know, 8 o'clock, I'm asleep, and I'm awake at a little after 5:30, just as the sky starts changing colors to get sunrise. And I loved that schedule. It felt really on point. Aside, and, you know, drinking water from the source and waking up with the sun, I felt very connected to the land, and with all the hikes that I ended up doing, it was a wonderful experience that I will continue to share with you all. So thanks for tuning in. Hope you have a great rest of your weekend, and I will see you in tomorrow's video, and we'll take it from there. Do good things. Have a great Friday night. Gonna go see some Empire Strikes Brass funk, New Orleans style.